Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman,
You get the idea?
bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever
and
tasted.
tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
When it comes right down to it, working with a financial advisor, it's a lot like dating. Good morning and welcome to Protect Your Assets. I am David Hollander, your host. So great to be with you this morning. For those of you just joining me for the first time, welcome. People around here, they call me the Sandman, and that's because I help people just like you sleep well at night by answering their most troubled legal, tax, or financial questions each week. That's because I've been running a tax, legal, and financial firm for over 30 years. So when I say hiring a financial advisor is a lot like dating, what do I mean by that? Well, I only say it because the relationship between your financial advisor and you is a lot about chemistry. Are we compatible? Do you like me? Do I like you? Do we see eye to eye? Do I bring value to the table? There's no rule that says you need to hire a professional to manage your financial life. It is perfectly acceptable and possible to do it on your own. But ask yourself this question: do you want to spend your free time, your days of living, your ideal retirement, thinking about taxes, looking at research, trading, financial planning, and just managing your money? Or are you looking forward to enjoying your life, your family, your kids, maybe your grandkids, and everything else that might come with all those years you worked so hard? Now it's time to have some fun. Well, that's what I thought. So if you're thinking about hiring an individual or a firm to act as your financial quarterback, then you want to make sure you hire the right person and avoid some common mistakes. So we're going to be talking about some questions that you need to ask your financial advisor before you work with them. So are you thinking about not having a paycheck when you retire? How much do you need to maintain your standard of living? What investments will you sell as you have to start making those kind of changes? These are all the questions that you should be asking yourself if you're thinking about going that route. Because let's face it, bottom line is these are the things that are going to come up. And so it's a good idea for you to be prepared to answer these kind of questions, because it's not easy to create income in retirement. There's different strategies you can use. Today we'll talk about some of those. So stick around today because we're going to get into that. Now let's get started. Well, the labor market surprised the market on Friday as it came out with numbers that the market just didn't really see coming. And so after Fed Chair Powell spoke last week, it's pretty likely now, Chair Powell last week made it look likely that the Fed would start to lower rates in September and possibly again after the election. The market didn't like much of the news it heard, especially from the job market. So the Dow was off for the week 2.1%. Year to date, it's now just up 5.4%. S&P 500 down 2.1% for the week. Year to date up over 12. And this is interesting. The S&P eclipsed the NASDAQ. Remember, the NASDAQ was up over 20. Now it's only up 11.8 for the year to date. Week to the week, it was down 3.4%. I mean, that was a big drop in tech this past week. MSCI International Index up a little bit, 0.2%. And the 10-year Treasury, well, it had a good little move, closed at 3.8. It was a pretty big drop from last week, 3.8%. Oil down 4%, $74 a barrel, and bonds were up. Remember, prices go up when yields go down. So for the week, this was a big move in bonds. Bonds were up 2%. 2% for the week. So what we saw as a result of the commentary and then as a result of the job market was we saw this increase in bond prices. And that happened pretty quickly, and yields started to come down. Like I said, the 10 years at 3.8. And we've been talking about this for a while. If you've been paying attention to this market segment, we've been saying that a good time to check your reinvestment risk, I called it, by having too much cash or too much short-term CDs in your longer-term portfolio? Well, you felt it this past week if you're out there shopping for bonds, as rates are now starting to come down, and so that reinvestment risk, we call it, is now pretty apparent. I like to balance my income. So say 1 to 5 years, 6 to 10 years, 11 to 15 years, 16 to 20 years is the way that you should start thinking about your capital and how it will pay out to you as you need that income to cover your expenses. Because things aren't changing. You're going to still want to live the life that you've been living. You're going to want to do the things you always wanted to do. And with inflation, whether or not you believe it's coming down or not, the reality is it's there, and things just cost more. And so for you to be doing more in retirement, you got to be aware of these kind of things, and you got to be thinking about them. And so overall, these are the kind of things you want to prepare for as you enter into retirement. So having an advisor, well, that could be a good idea. We're going to get into that. What are the things you need to know? And most importantly, what's the number one mistake that most people make when they hire a financial advisor? Well, when I come back, we're going to talk about that. You are listening to the Protect Your Assets show with David Hollander, the Sandman. That's me. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. Welcome back to Protect Your Assets. I am David Hollander. People around here, they call me the Sandman. That's because I help people just like you sleep well at night by answering your most troubled tax, legal, and financial questions each week. And if you missed any of the beginning of the show, particularly the market segment where I went over what just happened and what's coming, go check out my podcast wherever you get your podcast. Just type in Protect Your Assets. And you can type in the subject. You can type in estate planning, taxes, mutual funds, whatever you want to know more about. Just type that in your podcast and listen to the show. We've had hours and hours and hours and years of content there waiting for you. If you've just tuned in, well, today we're talking about how dating and hiring a financial advisor are really similar. Maybe you've thought about hiring a financial advisor to help guide you through retirement, but you just don't know where to start. Well, today we're going to go over some questions you're going to want to jot down to ask that person to make sure that you start off on a healthy relationship, we'll call it. So what's the number one mistake most people make when they hire a financial advisor? Well, the biggest mistake that I see people make is they lack the discipline to stay invested when things go awry in the market. Or they fail to invest excess cash that just is sitting around in the bank despite the fact that they get advice to do that. I see this happening all the time. You have technology right now. Being such a do-it-yourself investor is easier than ever. I think back to when I started in the business in the early 90s. We had to fill out paperwork, literally paper, and have you sign that application and give us a check to open an account. Now you can open your own brokerage account on your phone. You can start investing with a swipe of an app. It's really pretty easy. You can do it right from your couch if you want to. So hiring a financial advisor, on the other hand, well, it requires some effort and some due diligence and communication to find who might be right for you. And that begs the question, are financial advisors even worth the time, energy, and financial commitment that it's going to take you to get somebody that you can work with? Previous segment, I was talking about how there was a study out there that said that those who work with advisors have almost double the income. Well, that's a pretty good reason. But I think the answer comes down to understanding how much time you want to spend managing your investments, your knowledge of investing, and your discipline to stay the course when markets are difficult. You may want to remember back. I always remember 2008. It was such an anomaly. But 2020 showed us one thing, that markets are volatile. And unless you have a solid income plan, your income could swing wildly depending on how you've structured your portfolio. Over the years I've been doing this, I've seen hundreds, if not thousands, of different examples of how not to do things. Money is emotional, and you should start to think back to, remember February 2020? Or what about 2008? Remember the market started to drop 1,000 points a day? Remember that week, February 23rd of 20, the Dow dropped? Write this down, 1,028 one day, 877 the next, 1192 the next. For the week, it was off 12.36%. And we certainly saw that kind of volatility, if not more, in 2008. So when you decide to work with an advisor, recognize that a lot like a therapist or a doctor you go see, you need to listen to them to overcome your behavior bias that gets you into trouble. And if you're honest with yourself and you can't do that, then don't hire an advisor, because it's not going to work out in the long run. According to Vanguard, working with an advisor can add about 3% of additional return, talking about return on your average portfolio. Working with an advisor over time can add up to about 3% per year on your return. So if you're thinking of working with an advisor, what are some common mistakes to avoid when you start your search? Well, the biggest one I see is focusing on past performance. This happens all the time. You hire an advisor, you start working with them, and after a few years, you feel like they're not making you enough money. So you start to question the relationship. You start to do research online, or you talk with your friends. When you find that someone has done better than you did, then you start the conversation with that new group. Of course, they tell you what you want to hear, and so you try something else. Why? Well, when you hire a financial advisor, you're hiring more than just a money manager. A good advisor can provide holistic planning and guidance, not just returns. If returns is all you're looking for, then just tell them that when you start the relationship. Don't act like you're really trying to pursue a life goal through the proper management of your resources. Because if you are, once again, your advisor should know your risk level, how much you can afford to lose, meaning how you feel about that, and be able to show you how to touch different sorts of your capital when markets are down to keep your lifestyle going without a hiccup, without being forced to sell things that you don't want to sell so you can pay your bills. This is called holistic planning. This allows you the opportunity to look at your big picture goal, your values, and how your investments and expenses should be oriented to meet those goals as the economy unwinds, which it always does at some point. Those advisors who focus solely on performance, well, you could argue they're missing the big picture, period. So if that's what you're really after, be honest with your advisor right up front. Remember, any investment strategy alone, that's no guarantee of long-term achievement. Likewise, an advisor's past performance, well, that's no guarantee of what they're going to be doing in the future. Looking at past performance as an indicator of success or someone's qualification as an advisor is just a big mistake. The past doesn't guarantee the future, and I'd say it has nothing to do with your specific goals or how you're going to achieve them. So if you think about it, the relationship between a financial advisor and you, well, it's a lot about chemistry. Are you compatible with that person? Do you like them? Do they like you? Do you see eye to eye with each other? In other words, when you have a conversation, are you feeling like you're being heard? If you don't know certain things and maybe, they're saying it in a way that you don't understand, but you just accept it because they're the expert, but you're still not feeling good about the conversation when you leave the conversation, stop right there. Just say, hey, I don't know what you're talking about. Do you mind explaining this a little bit better? Or, I heard this. Why is that happening? A good advisor should be able to say, well, that's, here's why, and here's your situation, and here's what's going on. And that should make you feel better, despite the fact of whatever else is coming around you. And that's value. That's true value that's going to keep you in it. So, and that's how working together works well. If it doesn't work out that way and you're not really feeling great about it and you don't see results and things aren't the way they should be, particularly after time, well, then that might be an indication that something's not really right. I've created a free guide that digs into the value of an advisor and it can show you how to find out more, lays out what questions you should ask. If you want your free guide right now, we'll call this number 866-PROTECT. Call this number 866-776-8328. Adrian and Dylan are standing by. Call them, 866-PROTECT. Ask them for the free guide, and they'll go ahead and send it to you right away. Now, coming up next, it is time for our popular They Say segment, where I've heard them say hiring a financial advisor is a good first step to retirement. Well, is that always true? An ounce of prevention is better than a pound of cure. You're listening to The Sandman on the Protect Your Assets Radio Network. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. And people around here, well, they call me the Sandman, and that's because I help answer your most troubled tax, legal, and financial questions each week. So you can sleep better at night if you've just tuned in. Today we're talking about how dating and hiring a financial advisor, well, pretty similar. You got to ask yourself questions like, well, hey, are we compatible? Do you like me? Do I like you? Do we see eye to eye? Does my advisor bring value to the table? There is no rule, particularly today when information is so easily available, that says you have to hire a professional to manage your financial life. It is perfectly acceptable and possible to handle things on your own. But do you want to spend your free time, your days of living your ideal retirement, doing research, studying market trends, trading your account, financial planning, trying to manage your money if you don't know what you don't know and making mistakes? Or are you looking forward to enjoying your life, your family, your kids? Maybe you have grandkids and everything else that might come with your so-called golden years. Well, that's what I thought. So if you're thinking about hiring an individual or a firm to act as your financial quarterback, then you want to make sure you hire the right person and avoid the common mistakes that people make in the process. So today, that's what we're talking about. We're talking about some questions and some ideas you should be thinking about before you sit down with your advisor, or maybe you are working with someone right now. Well, ask them these questions. Shouldn't be afraid to do that. It should be an easy dialogue to go back and forth. Remember, working with your financial advisor is a lot like dating. And if you're enjoying this show today, then please tell your friends about us. And you can text them right now and ask them to tune in to Protect Your Assets. And hopefully they'll enjoy it. I appreciate that if you do that. Now it's time for one of our fan favorite parts of the show. It's our They Say segment, where we debunk common myths, half-truths, sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? There's only one man with all the answers, and here he is, David Hollander, the Sandman.
All right, so here's one I've heard quite a bit. Here's one they say. They say that hiring a financial advisor, well, it's a good first step to retirement. Is that always true? I wouldn't say so, not always. What do I mean by that? Well, there are people who specialize in retirement, and there's those who don't. I'm sure you've heard the saying, an ounce of prevention is better than a pound of cure. Well, not understanding the difference between those who are experienced in retirement planning and those who aren't is important. Those understanding the difference between what's called the fiduciary standard and the suitability standard, well, that can be a big mistake. Just as financial advisors can be holistic planners or investment managers, they can also fall into one of two camps regarding the level of care they are legally required to take when advising you. Some are required to use what's called the fiduciary standard of care, while others may follow what's known as the suitability standard of care. And there is a big difference. An advisor who's a fiduciary has a legal duty to recommend the best investments for you. The advisor should follow the best course of action for you, regardless of how it affects their outcome. Conversely, the suitability standard of care simply requires that, in this case, a broker shows you investments which they believe are suitable, not necessarily the best for you. So when hiring a financial advisor, make sure to ask them, are you a fiduciary? Do you make recommendations that are best for me? Do you use a written agreement or a contract which spells out exactly what you're going to be doing for me and how much you're going to be charging me? That should all be laid out in an easy format for you to see. The next big mistake I see all the time is that clients don't vet an advisor's credentials. Sure, all those acronyms after someone's name sound pretty good, but the term financial advisor is really a catch-all title these days. It doesn't really mean much. The person could be an investment advisor, could be an insurance agent, could be a holistic financial planner. Before you even seek to hire a financial advisor, get clear on the type of advice that you're looking for. What are you expecting this person to do for you? And have they done this for others? And if so, how many? And for how long? And what are some of the experiences that are out there? Are you trying to lower taxes that you're paying on your investments each year, or even on your other sources of income? Are you trying to figure out how not to outlive your retirement savings or die with, say, 10 cents in the bank? Are you concerned about medical bills and what would happen if your health changed one day and now you're facing a long-term care illness that can be quite expensive? I recommend this. You should write down right now, or as you're thinking about this, write down what you're trying to accomplish in retirement. And then when you interview the advisor, say to them, hey, this is what I'm after. How would you go about doing that? Remember this, designations like certified financial planner or chartered financial consultant, these are holistic focused people. These advisors usually should include, when they plan with you, your goals, taxes, risk management to determine what sort of investment strategy makes sense. And more importantly, as the months and years tick away, their plan should be working, should be creating more income for you than you may need, or at least enough to make sure that you're keeping pace with everything you're trying to do and not running out of money. Those are very important, I'll call them red flags, warnings that you want to make sure that things are going in the right direction. Next, do this. Make sure you interview multiple advisors, and you may even want to talk to some references before you end up hiring that person. You may fall in love with them. The first financial advisor you meet, they sound great, everything looks good, but that doesn't mean your hiring process should end there. Don't be lazy. As part of the necessary research, you should interview multiple advisors to make sure there is a good fit personally, and that they explain and show you tools that you're able to use and understand, because that's their style and that you're going to have to fit into, and either you like it or you don't. By interviewing multiple advisors, you're more likely to identify those things, those traits, those techniques that they use that are important to them to do their job, but also more important to you, for you to actually be able to look at some things on your own and be able to ask intelligent questions. I recommend find one who focuses on education and coaching to help make the financial decision easier or more palatable for you. This is especially important today when economic and market uncertainty right now is out there. You have some unrest, certainly politically, certainly with 2 wars going on around the world that could spread. And let's face it, I think taxes are only going higher, not lower. And as we saw this past week, market volatility, well, it's there, and it may continue. So I recommend using advisors who use investment philosophies that are rooted in academic principles and scientifically tested theories, not just picking stocks. Advisors who act as true coaches, not just as asset allocators, are typically the ones who maybe you might feel better with. So by interviewing different advisors, you can also get a feel for how each communicates, runs their practice, finding someone you can effectively communicate with should lead to a longer lasting and a more fulfilling relationship. Find out what the depth of their team is. This is very important. I see this a lot, especially with smaller offices. The main person's very charismatic. Looks great. Everything seems great. They have lots of experience. But what happens if something happens to him or her? They're now out of the equation. They sell the practice. Is there backup there? How deep is the backup? What can the backup accomplish if they're not there? That practice is important. I suggest interviewing not just the advisor, but also talk to some clients they work with. Ask for references of people who have worked with this person for some time, and don't just make it short term. You should look for those who have been longer term, at least 5 years or longer, because we've had several market cycles. Remember 2022? Ask each client what your experience has been. How has your cash flow been? How have your taxes been impacted? Do you feel confident? Speak with more than one current client. This is going to allow you to gauge how informed they are. They should be able to provide you a view of what the advisor's ability is, how they communicate with you, how their team works with you. And this should provide you with more than one point of view, because everybody's different, particularly in this space. You'll find different advisors have different opinions about where you should take money from, what the income strategy will look like. Be able to lay that out to you in writing so you can see it for yourself. Coming up next, how can you figure out what are you paying for your financial advice? You mean you're paying for your advice? Of course you are. Find out when I come back. Keep it right here.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com, where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back to Protect Your Assets. I am David Hollander, also known as the Sandman, and that's because I help you sleep well at night by answering your most troubled tax, legal, and financial questions each week. And today we've been talking about hiring a financial advisor, working with someone to help you. Well, it's a lot like dating, and so I've been covering the questions that you need to know to ask them to make sure that as you start that relationship, it works out. And maybe it's been going along for a while and you really want to know if you're getting as much out of it as you really should be, or if some of those questions that aren't getting answered, some of those feelings you're having, well, why is that? How can you fix that? How can you solve that so you can live the best retirement? And as we've been talking about retirement, it's a major transition, and it's made up of many financial as well as life decisions that you need to make. And then more importantly, as you're in that part of your life, to make it actually work out. Do you have enough income? Do you have more than you need? Are you paying more in taxes than you should be? Are you doing all those things that you always wanted to do? Well, we've been talking about this morning. We're talking about how to hire a financial advisor so that it works out. It's mutually beneficial. So how do you know how much you're paying your advisor for their work? Well, that really depends, as there are many different ways to get advice in the financial services industry. Moreover, you really need to understand what it is that you're after in terms of what your end objective is. Are you trying to lower your risk? Are you trying to pay less in taxes? Are you trying to get more from Social Security? If so, how do you pay for advice that helps you? Because nothing is really free. It just can't be. Everything in pretty much in the U.S. is a business, right? And businesses make money. So ask, what are the upfront and ongoing costs associated with the advice you're receiving year after year? How does that work? In today's financial advisory world, this should be your number one focus area when you try to understand how someone is going to help you and whether or not you're going to get what you actually pay for. Try to break it down like this. Asset management. That is monitoring and trading your account. What's the fee to do that? How about for planning? Do they provide a tool that you can log into that's custom built for you that needs updates and tweaking as the relationship goes along? Is that free or does that cost something? What about preparing your tax return? Is that free or is that a cost? How much? How about creating and monitoring that plan year after year as things change? Does it update automatically? Is there work required to go in and tweak it and make sure it's right? These are based on the amount of money under management, and there's a compensation percentage attached to that. Advisory fee. A true fiduciary can charge for their time by the hour per appointment or a flat percentage negotiated fee. There could be account level fees. These are 12B1 ratios. You can see these on your Morningstar report. Also turnover costs. There is things for selling. Most accounts charge annual maintenance charges and fees, so be aware of these costs. What are your costs? What are you paying for? You mean you're not paying anything? Don't kid yourself. Find out right now what it's costing you to get the advice you're getting. Call 866-PROTECT. Again, the number to call, 866-PROTECT, to find out what you are paying your advisor, 866-PROTECT. I'd like to give a big thanks to the Protect Your Assets team for putting together a great show today. My executive producer, Kevin Renfer, network manager today, Raph, thanks, buddy, and of course all my fabulous producers back there, Phil, Dylan, Adrian, Lucas, because without my team, well, I'm just another pretty voice on the radio. Thanks again, everybody. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.